right, the tech-heavy NASDAQ index, it has fallen into correction territory for the year. Now, what does that mean? A correction is simply in at least 10% decrease in the value of the index or the stock. And that's where we are here today. NASDAQ has lost at least 10% since its high that it reached for the year back in February. So what does this mean for you? How did we get here? Let's talk about it. The Dow Jones Industrial Average climbed Monday, while a sell-off in U.S. government bonds extended into its sixth week and sapped demand for technology stocks. Now, the Dow Jones Industrial Average is filled with 30 big blue chip companies, and that did pretty well on the day. It was up 1%. A lot of those old line, established, dividend-paying stocks, they did fairly well. On the flip side of things, though, the NASDAQ, it lost 2.4% and officially entered correction territory. Now, rising corporate bond yields are going to start to look rather attractive in the environment that they're in today. We'll talk about in a second, as compared with some of the growth stocks, which are typically these technology stocks. Apple shares dropped 4%. Tesla was down almost 6%. Netflix and Facebook, they're down 2%. Now, again, let's delve into a little bit more why this happened. In the bond market, the yield on the benchmark 10-year U.S. Treasury ticked up to 1.594% as investors sold bonds. The yield ended Friday at 1.551%, its highest since February 2020. In addition, many investors are continuing to keep an eye on the pace in which rates go up. Now, here's an interesting aspect of this. Tech stocks have been retreating in recent weeks as vaccination programs advance and economic data point to the recovery being underway. And you might question, well, what does one thing have to do with the other? Why are these tech stocks dropping if America is looking at getting back to normal? Well, it's because the thinking is that you won't need as much of the technology that we've relied on for the past year in the form of remote meetings and things of that nature. There'll be less of that as we get back to normal, okay, some semblance of normal. The NASDAQ Composite Index declined, as we said, declined more than 2% last week. Losing ground for the third consecutive week. And that's because investors are betting that the largest media, communications, and online shopping companies will log slower pace of growth as the pandemic lockdown ends. Now, those industries, online shopping, the thinking is people are going to want to get out, especially as the weather is warming up. They're going to want to get out. They're going to want to go shopping. We might see some sort of resurgence in, folk meeting for business in person to some extent. And of course, if we're looking at the media companies, it might mean some movie theaters start to reopen again. So we'll see. We'll see what happens. But how do you play this? Well, based on doing your due diligence, you may estimate that right now tech stocks are on sale. They have lost a lot of ground in the past few weeks. I've been looking at Apple. They've lost a good degree of ground. So it might be an opportune time for you to get in on that. Now, if you are a person who held a tech stock and you're thinking about selling, I would encourage you just to think about this. Do you own a stock or do you own a company? Okay, if you own a company, then is that company still worth owning now that its stock has dropped a little bit? Okay, are the numbers still making you look at this company in the affirmative and a positive light? Are they still viable in terms of the products or services that they offer? If those things are true, then you may reconsider selling into a losing market, because if the company is still viable, you own a small slice of that company. All right. Think about it like that. Is the company still viable? Apple's down. Do you believe Apple will continue as a going concern? I certainly believe that. We will see if it's true. I believe it will be. But that's just some food for thought as we continue to watch this market and how it reacts to the proposition of America and the world coming back online, so to speak. All right, this has been unprecedented, and definitely you have to do your due diligence and exercise some real uh, critical thought on this, because you don't want to look back 5 years from now and say, you know what, I missed out on a hell of an opportunity because I was skittish or I was listening to somebody on TV or on YouTube. Okay, so that's why I don't give you specific advice. I give you concepts that you may be able to apply to your specific situation.